Buy heavy, Trump supercharged plan to supercharge the 2026 stock market. What if the stock market is not random right now? What if what we are seeing is positioning for something much bigger in 2026? Former President Donald Trump is back at the center of global headlines, and markets are not ignoring it. Stocks, commodities, and even crypto are reacting before policies are fully announced. So the real question investors are asking is simple. Is this the moment to buy heavy or a trap before volatility explodes? Let's break this down professionally. First, why markets care about Trump right now? It's simple. Markets don't wait for lows, they move on expectations. Historically, Trump era policies were associated with corporate tax cuts, deregulation, aggressive trade positioning, strong domestic manufacturing focus. During the previous term, US equities surged with the S&P 500 gaining over 60%, while corporate earnings expanded and capital flow into US assets. Today, traders are asking, is the market front running a similar playbook for 2026? In the part 2, the supercharged narrative. Let's be clear. Three themes are driving this narrative. The first one is the tax and business expectation. Lower corporate taxes and incentives for the US companies historically boost EPS growth, share buybacks, risk appetite. Even the expectation of tax relief can lift valuation by 10 to 15% in advance. Secondly, America First capital rotation. Trump aligned rhetoric often favors energy, defense, infrastructure, industrial manufacturing. These sectors tend to outperform when government spending increases, trade protection rises, domestic production is prioritized. Now that we understand why markets are positioning, the next question is simple. Is price confirming these narratives? Because fundamentals tell us what could happen, but charts tell us what money is actually doing. So let's move from headline to price action and see where capital is really flowing. Well, on the chart, we can see the S&P 500 is still growing. We are still in the uptrend. We can see movements based on up and downs, higher highs and high lows. The price is still moving from April last year and still continuing. But the price right now is based on buyers over price. That's why we can see a small consolidation forming a triangle wedge these recent weeks. So people are still watching. They are expecting some kind of break of the structure, collection of liquidity based on price movement before resuming. But there's something very fishy here. It's as if institutions don't want price to go down. Remember, if you can draw this kind of trend, we see this kind of rejection every time the price hit a major level here, especially this 100 moving average, the price got rejected. So the price continued to respect high highs, yes, high lows, and key moving average, as you can see on this particular point here. Here too. And here. And it aligns with this trend line places where it hit. This is not just random. This is institutional decision. So this confirms what we discussed earlier. Money is positioning, not exciting or exiting. Now, when it comes to the Nasdaq we also see a movement like the S&P 500, but this time we have a risk appetite. So despite volatility, price structure remain bullish. Of course, we have higher highs, high lows, higher highs, high lows, high highs, high lows. The price remain bullish. So this means tech leadership has not broken. When market expect pro-growth policy environments, growth in this exactly what we are seeing right now. So the Nasdaq is still continuing, even though we still have a consolidation here. The price is not just exiting. the price is positioning like the S&P 500 too, even though we have risk appetite, because based on price movement, people will definitely step in if the price come and create some kind of reaction on this major level here. Because remember, the market moves with liquidity. And right now in intraday session, we have small pullback. Those pullback are the same of what we have been seeing so far. So the price is still deciding whether or not it will break this level of structure, continue to go higher, or come down here and collect some kind of daily liquidity before resuming. Otherwise, we can see another movement that people might expect, because in 2026, people are predicting crash. But this is just noise. This is just prediction. The market just don't move with opinions. It moves with price, liquidity, volume. So if the price break this level with big volume, we can expect a collection of liquidity before resuming. So you have to be careful, patient, because patience is skills when it comes to trading. Now, let's move to NVIDIA. When we see NVIDIA on a weekly time frame, we don't have to need a PhD on technical analysis to know that we are in the uptrend. The image is clear, and buyers don't like this kind of situation. They expect a crash before buying, because when NVIDIA is here, it's probably overpriced in their views. But remember, we are not here to tell you if it's overpriced or not. NVIDIA remain bullish based on AI, based on other liquidity in the market. So we have a bullish trend, but pullbacks are shallow. The momentum is strong enough, but buyers defend key zone. So when it comes to the daily time frame, we have this level here. Even though we have consolidation, this is market institution deciding to maintain here, because the price is still on top of the 200 moving average and literally hitting the 100 moving average before continuation. So we might expect another growth or another continuation of liquidation the recent days, or a continuation based on Trump's news, or maybe on the IMD fight and other things. When we come to the energy stocks, like for example Exxon and Chevron, and we can clearly see the beautiful uptrend. But the energy stocks show steady accumulation, not hype-driven moves. So it aligns perfectly with domestic production themes. So the strategic independence is also respected, and we have inflation hedging. So this is not rotation, not speculation, it's positioning. Be careful, guys. When this kind of situation happens, we have to know what we want to expect for the future years if you want to invest. Now, when we move to the different stocks, for example, like LMT or RTX, we have a beautiful uptrend here on the daily time frame, price respecting exactly the moving average, like his friend or father S&P 500. The price is still growing, beautiful uptrend. So the different stocks tend to move before policy decisions. That is very important. As you can see on the chart, the stability and higher base forming, and it supports the idea that markets are pricing expectation, not waiting for confirmation. So if you want to wait to buy, maybe you're going to be late. If you might buy, maybe you are buying very expensively. So you have to decide where you want to be in the future years, weeks, depending on your portfolio or your way of trading. So in resume, guys, how do we expect this based on news? What we see on the chart matches the narrative, not panic sellings, not structural breakdown. Capital rotating into sectors aligned with policy expectations. This is exactly how markets behave before major macro shifts. In conclusion, the fundamentally markets are positioning around growth expectation, policy direction, capital rotation themes. Technically, price action confirms accumulation, not distribution. Leadership holding structure. Volatility being absorbed, not feared. This doesn't mean the market goes straight up, but it does mean smart money is preparing, not reacting. So again, the question might not be should you buy heavy? The real question is, are you aligned with where capital is going or are you fighting it? If you want more analysis, not noise, make sure to like, comment, and subscribe. Have a nice day. Thank you for watching.